The Fibonacci retracement tool is one of the most used tools in trading. The tool is used to find support and resistance levels or to determine good take profit points. In this video, I will explain the tool and how to use it so that you can add it to your strategy and make some profitable trades. Hey, great that you're watching another video yet again. My name is Corne, and if you're new to this channel, first and foremost, welcome. I share everything about crypto here because I simply love it. If you're also someone who loves crypto, consider subscribing to this channel and giving this video a thumbs up. I would be very grateful for that. So as talked before, we're going to have it about Fibonacci in this video, the Fibonacci retracement tool. You also have the Fibonacci extensions tool, but that's for a later video. You can build in the extensions in the retracement tool, but for now we keep it with the Fibonacci retracement tool because that's the most important tool and the best tool to determine support and resistance levels or take profit levels. You can use it in either way, and it's a very useful tool for in your strategy, whatever strategy you use. So let's first check out a little bit of the theory behind Fibonacci. The Fibonacci sequence is named after Italian mathematician Leonardo Pisa, known as Fibonacci. Of course, they call the tool Fibonacci because he's known as Fibonacci. He introduced the sequence to the Western world in the 12th century, and that's something I just find very interesting, super cool, that something in 2022, as of today, is still used what was created in the 12th century. So the Fibonacci sequence is, Fibonacci sequence is a series of numbers as shown below. So this is the Fibonacci sequence. So you got 0, 1, 1, 2, and if you notice, you can add the two numbers in front of each other, multiply them, and then you get the number after it. So 1 and 1 is 2, 1 and 2 is 3, 2 and 3 is 5, 5 and 8 is 13, and you can go on like that. So each number in the sequence is simply the sum of the two numbers before it. For example, 2 is found by adding two numbers before it, 1 plus 1. Same way, 3 is found by adding two numbers before it, 2 plus 1, and so on. Fibonacci numbers are treated as nature's number because it's said that they appear in every nature, from the leaf arrangement in plants to pattern or florets of a flower, etc. And this is super interesting and awesome to see. So there are many natural things where this ratio is found. So be aware that it's not a magical ratio. However, setups can be designed using it. And this is awesome. So here you got the Fibonacci ratio. So you see the digits we just saw in the sequence. You see the sequence here yet again. And this ratio you see back in nature everywhere. So if you will search for it, you will find shells, flowers, your ear, even your body, animals who have the same ratio in it. Here's an example of your ear on the side. Leaves. What else do you got? Even the Mona Lisa. If you look at here, eggs have the same shape. What else? Vegetables, snails, shells here, sea animals. Everything on Earth is correlated or has the same ratio as this Fibonacci, or almost everything. Waves, the same. If a wave is going, you have the same shape again. So that's really interesting and awesome. So next, the Fibonacci ratios, and this is the important part of the theory. If one number of the Fibonacci series is divided by the number that follows it, the ratio will be 61.8%. And this directly is the most important Fibonacci extension. Or ratio, I mean, which is also referred as the golden ratio. So most important. If one number in the series is divided by the number after the next number in sequence, the ratio we get is 38.20%. It's also a very important number in Fibonacci. Same way, every number in the sequence is 23.60% of the number after the next two numbers in the sequence. Have a look at the picture of Excel shown below. So what they're saying is if you divide through 3 by 5, you get 61.8%, 5 by 8, 61.8%. But if you use the number after it, so 3 divided by 8, you will get the 38.20%, and 8 divided by 21, 38.20%. But if you take the number after that, so 8 divided by 34, you get 23.6%. or 13 divided by 55, you get 23.6%. So you every time get the same ratio like you see as well in this nice little chart you got here. So generally 23.6, 38.20, 50, 61.80 and 78.60 are treated as Fibonacci ratios. And keep in mind, 50%, oh they say it here as well, actually 50% level has nothing to do with Fibonacci sequence, but traders use this level because of tendency of price to reverse after retracing half of the previous move, and simply 50% is half of the move. So it's an important level as well. So the most important levels for you to keep an eye on are the 38.20, the 50 and the 61.80, or the golden pocket. So this is the golden ratio, but the golden pocket is the space between 61.80 and 65%, or 66%, and me myself have it on 66%, just to keep it a little bit wider, so the range is a little bit bigger. I like that. You have to test for yourself if you like that, yes or no. So what you're gonna do now is pull out the Fibonacci tool. So you got here on the side the third icon, you click, then you got the Fib retracement tool, and that's the tool you'll need. First going to the side a little bit. So that's the tool you need. So you click on it, then you have one point to the other just to get it out there. So you can pull in or put in the right settings, double click on it, and then you can take over my settings if you'd like to. So the most important levels I gave the color yellow because of golden, right? So the 38.2 like we discussed, 61.8 and the 66, so the golden pocket, 1.618. So every step you can do the 1618, 2618, 3618. The 618 is the most important level there is. So put in yellow with important levels and just black, or if you have a black chart layout, put in white lines so that you have the right view of it. So put it in, and then I put the extended lines left and extended lines right out, because it's not nice to see the lines everywhere on the chart. You just need one little part of the chart where you need to put over or pull over the Fibonacci retracement tool, so that's fine for me. So what you will do with the Fibonacci retracement tool is search for retracements, and then if you draw the Fibonacci tool from the swing high to the swing low, you search for a short opportunity. Why? You're in a downtrend. Then there comes a reversal, and then traders start looking at the Fibonacci retracement tool as resistance levels in this kind. So if you put it from the swing high to the swing low, you will search for short opportunities, or if you went in a long trade right here somewhere, you can look for take profit points in the chart. So what you will see is the reversal here. We blasted to the 23.6%, not a very important number in Fibonacci, so you see there's no reaction right here on the chart. Then we meet the 382. That's an important level. Like you see, we have found resistance, so a lot of resistance, and then blasted through it, fell back on it, and then again blasted through the 50%, like you can see here, and then we met the golden pocket, so the 618 and the 66%. Between it, a lot of resistance, traded a little bit sideways, choppy price action, went to the 786, a couple of times resistance, and then we finally went down again. So what you can do then is just switch around the Fibonacci retracement tool. So you search again for another short opportunity. So we're going down here. We have the retracement. You can see the 0.5 is a big resistance here. So resistance. If you went in a long trade here, you could take profits there, or you can look for possible short trades to take. So you could go into a short trade right here and then go back down, because what you're looking for is you got this downtrend, you got a retracement, you're looking for some level where you can get in a short trade and then ride the trend further back down. But the trend now, the trend on the daily is bullish, so you don't want to find short trades, but rather you want to find long trades. The principle for long trades is exactly the same, but then on the opposite way. So if you are searching for a long trade, you will find an uptrend like here, get the swing low to the swing high. So you get a rejection on some point and go back down again. and then you're going to search for a support level to get in the long trade and ride this same trend, the uptrend again. So you have the uptrend right here. You see here's a rejection, you fall back down, so you can put the Fibonacci indicator from the swing high to the swing low right here, and you just search for a support level. So we the rejection here, not really good support or confluence for the trade. So here we see the 0.5 harsh rejection came off of it, and again, and you can get in on a retest right here and then ride the momentum and the uptrend in this trade. So you got this uptrend, have a little retracement here, let's find support here, get into this trade, and then ride the uptrend again. So that's a nice trade you can make. You can also find multiple confluence with it, just as you can see here. So here you can on the 0.5. So you got this 0.5 right here. Fibonacci is 1. You get the buy signal from my indicator, the CPI or the Kryptonite Pro indicator I created, soon online. And also you can see that here is a big demand zone, right? So I'd say right here is a big demand zone, and you can get into this as well. So you get 1, 2, 3 confluence to get into this trade. That's saying, okay, take this long trade. This is a possible and nice point of support. Get into this trade, and you get into this trade, and then you can sell it here when you get the sell indicator again, the big sell indicator, and look for a possible entry for a new short trade. So we're or a long trade might be possible as well, but for the short term you could take a short trade. So you come back down, find support here, come back up, 382 harsh resistance, and we get this rejection of this level, and you might be able to take this trade and ride this downtrend. So that's really how you use this indicator. I hope you find this video helpful. If so, like the video please, comment beneath this video, and subscribe on this channel if you want to learn more about cryptocurrencies, trading and stuff. So thanks for watching, and I hope to see you back in the next one. Adios.